Hi, this is Daniel with Unrivaled Investing. Holy smokes, just Sunday evening, I posted a video about how I was concerned about Alteryx. The stock had dropped 30% on Friday, and then the next trading day, it dropped another 10%. Alteryx is in free fall. It's collapsing, and the question is, how low can it go? Here's a disclaimer. You can read it on your own time. Before talking about the recent price action with Alteryx, just a quick, reminder. This channel is all about trying to find you potential multi-baggers, companies that can go up hundreds or even thousands of percent. I look at companies through the lens of an unrivaled value proposition. If you have an unrivaled value proposition, that means you offer a good or service that no other company offers. So if you're interested in finding these potential multi-baggers and joining my journey with me as I look for these companies, hit that subscribe button. And if you enjoyed this video, certainly please hit that like button. So why Alteryx? The company dropped another 10% today. Now it's a $109 stock. And here's price action. I think over the last 3 months or 6 months, you can see the low in March was around $80 a share. You can see this huge gap that's started in the last 3 days where it fell 30%. Reporting after they reported dismal second quarter results and just completely terrible, having a completely terrible outlook for the rest of the year. So you could see it's sort of in this trading range. Based on this recent action, it wouldn't surprise me at all if you see it retested the lows that you saw in March, of around $80 a share. So, but keep in mind, this is actually my second video on Alteryx. So I recommend you actually watch that first one, because that first video I spend a lot more time thinking about what's the company, why did it drop, what's their value proposition, where do they stand relative to competitors, and just sort of sizing up Alteryx. And the video helped me understand how I would want to value the business, because there's a lot of key components that go into valuation, and valuation is ultimately what helps me pull the trigger when I'm looking at a company. So what do I think will happen now that it's dropped, 40% in just a couple of trading days? I put a monkey in a suit here just because the truth is it's anyone's guess in the short term. In the short term, anything can happen, but given the sharp sell-off, the prospect of a sharp reversal higher or a dead cat bounce is definitely possible. Honestly, the short term is a really tough game. I don't think I have any special insights. So instead, I try to focus on finding companies with that unrivaled value proposition, because when you find those companies, it really does make your life a lot easier, because if you're unrivaled, it means you're going to win over time. As long as you're in a marketplace that's continuing to grow. Then if I think a company has a UVP, I layer in valuation to make sure I'm not overpaying, and I, size up the risk reward and make sure it's still attractive. So where is it valued right now? Based on a price of around $109, which you can see the scenarios here. These are the hypothetical assumptions. So this is all estimates, completely hypothetical. You can hear the logic that I used behind these assumptions in that first video that I put out on Sunday evening. We're penciling out sales growth in 2020 of somewhere between 10% and 20%. The base in high case might be high, given that they're guiding to, I think, 10 to 11% for 2020. So this is giving them credit for being conservative. Maybe they miss. And even after the recent drop, you still see that on a forward sales basis, it's still not. This is not a dirt cheap company. It's trading somewhere between 15 to 17 times. And as subscribers to my portfolio at Unrivaled Journey, Unrivaled Investing Journey, they know that like my top position is a company that trades around 1 times price to sales, and it's growing at double the speed that they're guiding to for this year. So when I see a company that's guiding to 10% and they're trading at 15 times sales, that's the reason why you've seen that drop so much. Is it's still in the very rarefied air valuation perspective. And so then let's layer on some growth assumptions over the next 5 years. I'm penciling out somewhere from 10% on the low side. This is compounded annually. So that's 10% to 25%. 25% is incredible growth. And so you see that takes you to 740 million in sales on the low side by 2025 and 1.5 billion in sales on the high side. I'm trying to get a range here. And so as a multiple of 2019 sales, you're getting to around 2 times to nearly 4 times. Then I sort of layer in the margin assumption, operating margins of 25 to 35%. Those are great margins. Most companies would kill to have those types of, profit margins. And, once again, if you watch that first video, you can see why I penciled this out. They already are profitable. It's a software business, so you should have nice margins. And you can see that the implied multiple 5 years out, layering in these margins, layering in some sort of tax rate, is somewhere on the, if you look at the low case, it's 50 times earnings, and on the high case, it's 18 times earnings. So then what sort of multiple do you want to assume for 5 years out? So I'm slapping a range of 20 to 30 times. It's obviously a wide range. You could assume an even wider range of maybe like 15 to 40 times. That will definitely impact your end case. But in this scenario, you see that, layering on this 20 to 30 times multiple. And keep in mind, I haven't changed any of these assumptions from the video last night. All I did was change the price, and you can see that it's still not crazy compelling. You're still looking at effectively a one-to-one scenario that you're looking at here. So the hot take, or what's my angle? If you already own Alteryx, I'm not trying to make you do anything. So don't get rubbed the wrong way with this video. If you think their fundamentals will perform much better than my high case, then it makes sense for you to hold it or even buy more. I'm not trying to scare you out of it. That's called a variant perception, which is great. If you have high confidence, like Daniel, this company is going to grow way faster than 25% over the next 5 years. And I'm highly confident they will have better than 35% margins. And I'm highly confident they'll have much better than 30 times earnings multiple 5 years out. Great. I mean, that's what a marketplace is for. It's for these different opinions. And so if you have a strong opinion on any of those and you think that I'm lowballing it on the high side, great. That's what the variant perception's for. But if you're not sure what the probable scenario is and you think the base or even low case is feasible, then you should really think about your position, because what I'm penciling out is not really a great return. And the low case, it's 60% downside in 5 years from now. So it's not even dead money. It's you've lost a lot of money over 5 years. Um, now you could you could flip it. You could say, but couldn't it take off again? Like you saw the stock price action since March. Couldn't it double again? Couldn't it go quickly up 100%? Yeah, anything can happen in the short term. I'm not arguing that. All I'm trying to say is let's have probable scenarios based on valuation, based on fundamentals, and what do you think the business should do or should be worth. But is it possible something crazy happens? Absolutely. Crazy things happen to the upside and downside all the time. So if this takes off, or some rival comes in and tries to buy it, and it, you go, Daniel was totally wrong to be lowballing this. Like, look, it wouldn't surprise me. I don't have a horse in the race on this one. I don't find the valuation particularly compelling, given what I highlighted over here, which is 60% downside, 60% upside over 5 years. That's not really super compelling to me. Um, before discussing what valuation, I would be interested in reassessing Alteryx, go to unrivaledinvesting.com if you want to track my personal financial journey. You can see what companies I'm buying or selling in any given month, and what I own in my portfolio. And so what valuation might I reconsider? And keep in mind, my opinion will change if I think their growth rate is materially different than this, or if their value proposition was much clearer. In the last video, I sort of talked about how, I think I understood their value proposition, but I didn't understand why it was unrivaled. And that's the key factor that I look at in every company. And if they start talking about, yeah, we're so much more confident that we're going to start doing 20% growth in the years ahead, then I would reassess it, and then maybe my base case becomes 20%. But I'm not seeing anything that's giving me that confidence that they're going to do better than 15% annualized growth over the next few years. And so what valuation might I reconsider? I might reconsider around $60 a share. Obviously that's a lot lower than where it currently is, around $110 a share. But that's the price where, you can see on the downside scenario, it's 30% downside over 5 years. On the upside, it's like 200%. And so on a payoff ratio perspective, that's like 7 times, which, that's much more compelling to me than a one-to-one upside downside. So, and keep in mind, if it got closer to 60, I'd probably be reassessing, rethinking, doing more due diligence to think, am I right about this range? Or maybe I can refine this range. Maybe the range is 15 to 25%, 15 the low side. Or maybe the range, maybe I refine it lower. So, as it gets closer to that target price, I would refine this, personally to say, hey, would I want to buy this? Yeah, so that's the story of Alteryx. It's fallen a lot. Wouldn't surprise me if you see a bounce short term, but from a valuation perspective, I still don't find it super compelling. Maybe I'd consider it a lot lower. I'd love to see some data points that really cement the idea that their value proposition is unrivaled. And once again, I'm not trying to force any big shareholders or any, super long shareholders to sell your position or have self-doubt. No, I'm just saying, like, if you own it, you should know what you're underwriting and what are sort of the underlying assumptions that you're baking into it. And God bless if you think that the assumptions are if your assumptions are way better than mine, that's called a very variant perception, and great, perception, and that's great if you think it'll do way better than what I'm penciling out, and I hope you make a lot of money. But if you're not highly confident that the high side plays out, then you should be aware that the odds aren't that great. If you're not highly confident in the best case scenario that I'm penciling out here. Thank you so much for watching. If you enjoyed this video, please hit the subscribe button and please hit that like button.